Hello, good morning. Now, today we are going through my swing strategy that I've built upon over the last 11 years of live trading and market conditions. It has stood the test of time to this day, and even in 2025's tougher, more treacherous conditions, it has still managed to pull through. And July 2025 saw my 19th month on the bounce in the green. Okay, so it really has stood the test of time and is very much a bulletproof strategy that I've developed and refined years after years after years. So we're going to go through that setup today that made me just over 4.5% in July, which equates to just over £37,500. So we're going to go through my type of strategy and setup model that I use and I take to this day live in the markets in today's video. So it promises to be a good technical one. So a coffee and a notepad is going to be very much needed by you guys watching this. Now, if you don't believe me, I'm one of the very few traders and I pride myself on taking every single trade live, fully timestamped for everybody to see, wins, losses, break-evens, all of it. July, I actually started in a small amount of drawdown, but as you can see, we pulled through into finishing at 4.4% for the month. And 2024 alone finished just over 80% up for the year as well, which is all again being documented live, every trade called live, full transparency. And I will always continue to do that to prove I am who I say I am and that my strategy actually works. So without further ado, let's get into it. Grab that coffee and let's go. So guys, you join us in 2025 on gold. And the reason I'm going to do 2025 is because, as I said earlier in the video, it's been very choppy, or a lot of traders, both unprofitable and profitable traders, have found 2025 conditions very difficult when they don't need to be and they don't have to be still. It's because a lot of people are more lower time frame based because that's where all the noise is. That's where everyone pushes and it's not good. It's not the way trading really is. If I know I'm biased, but look, I've been over 11 years now of trading, live trading, full transparency, and this strategy is bulletproof. It's robust. It works for a reason. This is why I'm still able to continually pull consistent profits from the markets. July just finished, that was 4.4%. That was my 19th month on the bounce. 19th month in the green, okay? That is proper consistency. That's not me trying to show off, but it's me saying this is the power of strategies like this where you're more higher time frame based. Everything you see out there is much more lower time frame because it feeds into people's instant gratification and ego and greed. It doesn't work in the long term. It doesn't, okay? And I'm biased, but I've got the data to back it up and the proof. So we are in January, the month of January already, so start of 2025, where a lot of people found this choppy. So we're on gold, we're very clearly bullish. We just need to always establish where we are within the market. We always want to make sure we're trading with the trend. We're not trying to do anything fancy. We are trading with the trend, and it's simply aligning ourselves in a bullish market like this at higher lows with highly confluenced areas of interest between the weekly, the monthly, the daily, and the 4 hour. Okay, so monthly is very bullish. Weekly, we are bullish, big bullish leg here. Well, swinging bullish leg here. For me, this is just a simple pullback. We've had the engulfing on the weekly. We're bullish still when we look at these last few weeks and breaking out again. Simple as. It doesn't need any more analysis than that from a weekly and a monthly perspective. Now, daily area of interest at the moment. This is our prior, most recent daily leg that we were interested in. So if we just measure the range of that did come off about 50% of the range, yes, to a T, before then moving on. So now as we approach those targets of that fib, we are expecting some form of hopefully slowing and some form of ending of this daily leg. So we just need to be aware of that, okay? So actually, if we mark that range back on and we mark those targets, because fib levels, if they're drawn properly on the right time frame, so higher time frames, they are hugely respected and hugely trustworthy. Fibs are obviously never a reason to take a trade. They are simply a way of measuring a range and simply a way of helping us identify where price in continuation trending markets like this, lovely swinging price action, they're simply a tool to allow us to identify where price is likely to pull back to before it continues on. That's all they are. They're not a reason to take a trade. They're a way and a tool of analyzing that highly probable area of interest. So we'll pop those on and then we'll just delete this fib so it's not too noisy. So we drop onto the 4 hour. This is now where we start formulating a position. So at the moment, we need to wait for price to finish, okay? We need to wait for this leg to stop before we get involved. So I've marked these 2 daily targets on. Now we might start to get it already actually by the looks of it, depending on which target we decide to go into. So let's see what happens. Perfect. So it looks like we're respecting this because we're starting to get a pullback now. So with that being said, I can delete that now. Now, when we go back onto the daily, we have a new daily range now, okay? Because we've fulfilled the targets of this leg. We can now safely measure this next leg, this next range. Now, gold loves the 50% and the 61.8 region on the 4 hour and the daily, okay? And the weekly, but mostly the 4 hour and the daily from the data I've collected. So not every time, nothing's obviously 100% guaranteed in trading, but a lot of the time it does like that area of interest. So we have a daily range. So these fib levels are a lot more trustworthy and these areas of interest because they're on the daily compared to say the 30-minute or the 15-minute, okay? Where you know, lower time frames, there's a lot more noise and things, quite frankly, aren't respected and aren't trustworthy. So we know we have a potential area of interest here around that 50% and 61.8 region. We've got prior daily structure that was here. I know this is a 4 hour, but that's prior daily structure. I'll show you again here, and we have as well, we've got the 4 hour EMA creeping and encroaching as well. Again, the EMA is not a reason to take a trade, it's simply a confluence, and we've got around 2690 region. So we need to make sure we're not interested in this until we see price getting into that area of interest. So we're starting to get into it now. So we've had one tap, 2690 round cycle number, two a T, lovely body close. Now, if I just go back one candle, at this point here, I'm not interested still. If we go on to the 1 hour, I'm still not interested because we are, the 1 hour is bearish, obviously, to allow the 4 hour to pull back. That's very healthy. That's very normal. The 1 hour is purely more for entries and checking that momentum is slowing and that we're starting to get my entry model criteria, which I'll save for another video. Now, so at this point here, I'm not interested. We want to see a reaction, okay? Now, at this point, still not interested, okay? We want to see more of a pull away. There we go. Good. So this is our most recent 1 hour prior bit of structure. We have now body closed above that. So I'm now a lot more interested in this, okay? But what we want to see first, so at this point now, I like this, okay? But we want to see now if we can get a better entry. So any form of gentle pullback, okay? So we just go back onto the 4 hour, see where we're at. We'll wait for this 4 hour to close just to make sure it's trustworthy. Brilliant. So we've had a nice 4 hour close. We know this is a daily and a 4 hour high or low area of interest. We're getting a reaction from that area that we were hoping there was going to be one for. So we're not blindly entering just because price gets there. We are still being sensible and waiting and weighing up. Are we seeing what we want to see at this area of interest before we pull the trigger? Okay. Now what we've seen here, we've obviously seen this 1 hour breakout. And actually we are now within this nice new 1 hour bullish leg. And as you can see, we've actually, the 38.2 is there as well, but we've been coming off this this area of interest on the fib. So after seeing this now, this gives me a slightly better entry than if I'd entered the top here. So after seeing this candle, for example, here, this is perfectly valid for an entry. Perfectly valid. Now, from a 4 hour perspective, we just want to make sure we're covering those lows, okay? Again, but from a 4 hour entry now, that is totally valid. And we're going to go and target those other daily fibs, okay? That daily target that was previously respected. So this is perfectly fine. And some people might look at that and think, wow, that's a massive stop loss. But actually, we are targeting, because we're higher time frame based, there's a lot more patience, it's a lot more easier job, there's less noise. We can simply, once we've entered, we can see and sit back and let price do its thing. Everything is in sync. There is no reason, there's no reason for this to flip against us unless we see a massive shift in higher time frame structure. And at the monthly, as you saw earlier, the monthly, the weekly, and the daily are all in sync. So if we do see a massive flip of structure, that's fine because it's highly likely that then we're going to see a massive change of structure to the downside for many, many days and weeks. That's fine. That's fine. That's an optimal loss. That's what a stop loss is for. So we're covering here 1 hour structure, okay, just to make sure if price wants to pull lower, it still can breathe. And obviously, as you've already seen on the 4 hour as well, the same for the 4 hour in case this wanted to wick lower first before coming up. So let's see what happens. Let's see what happens. Everything is in sync. So we're ranging. Brilliant. So we've now had our push. Okay. So we're nearly at 50% of the move. Okay. Now, if we can get another push above, we'll go break even. Brilliant. So I'd be break even at this point. Again, just because, again, within this move here, price could have easily pulled down lower here and potentially wicked us for break even before pushing on. I'd definitely be break even now on the trade, running risk free, because we've now put in a new 1 hour higher high. Okay. And let's just see. So we hit the first fib extension. Do we carry on? Looks like we might get it. Potentially. We're ranging. And we get there in the end. So you can see, it's the beauty of this is how many decisions have we had to make there once we've entered? One, when we've gone risk-free. That's it. Now, a lot of people will think, oh, flipping heck, this is a long trade range. So that would have been a Monday the 20th, and we hit targets on Friday the 24th. So it's only 4 days worth. It's not a lot. And for a lot of you watching this who are working not normal jobs, 9 to 5s, you can't afford to be on charts in London and New York, particularly, trying to look for 1 minute, 5 minute entries. It's ridiculous. Intraday and scalping it's very, very difficult, and I wouldn't recommend it to anybody. It's not worth doing. There's minimal longevity in it. Even if you think you're seeing some success from it over a 6-month, 12-month period, that's irrelevant. We want to know, does it stand the test of time like a strategy like this does? You know, we don't care about a month's worth of data or 2 months. We care about a year, 2, 3, 4, 5 and beyond years worth of data, a proper strategy that can withstand all market conditions. This is so much cleaner. We barely had to touch anything once we made it break even. And I'll be honest, for 4.3% for a week's worth of work, 4.3% is a brilliant return. Remember, you're a fantastic trader if you're making anywhere between 2 to 5% a month. Remember, it's a capital gain. Once you have a brilliant strategy, it's a capital gain. 2 to 5% a month on high 6 figures or even 7 figures, you're laughing. Even if you had 400k and you're making 5% a month on that, that's 20 grand. That's life-changing for 99.9999% of people in this world. So, you know, avoid the hype on social media that you see. Clean systems like this work a treat. Swing trading is the way to go. I am biased, but I'm biased with very, very good reason, because I have an indisputable amount of evidence that this works. And this is why another reason why I call every single trade live, because again, it proves time in, time out, every month, every quarter, that this can consistently return, you know, profitable returns on the market. Like I said, 2024 finished over 80% for the year, which is brilliant professional retail performance. Okay, so it's a brilliant model. It works both bullish and bearish, and hopefully that's given you an insight into that. If you'd like to learn things further and you'd like me to hold your hand with this, then of course you can book a call below and jump on board working with me. So guys, as always, I appreciate you watching, and hopefully you found that very, very helpful. Keep it simple, keep it clean, avoid the lower time frames. They are noisy as hell. Be a patient, disciplined trader. That's what will pay you long term. Take care, guys.